What if the real driver of global prosperity isn't technology, finance, or innovation, but metal? Steel, copper, nickel, the physical stuff buried underneath our feet. Today's conversation reveals why the rise and fall of nations has always been written in the story of what we can dig out of the ground. Welcome to the Commodity Exchange, the podcast where we dive deep into the forces shaping global commodities, from markets and materials to the geopolitics behind them. Whether you're an investor, an industry insider, or simply curious about the world's most essential resources, this is the podcast for you. I first met today's guest, Scott Crooks of Codelco, at the International Copper Study Group meeting in Lisbon last October. His presentation absolutely stopped me in my tracks. It reframed the resource struggle we're living through today, not as isolated events, but as part of a much deeper historical pattern. As the saying goes, history doesn't repeat, but it sure does rhyme. So what does history actually tell us about the modern battle for resources? And what might it reveal about the future? I'm thrilled to have Scott Crooks, Principal Analyst at Codelco, with me today to walk us through this big picture. Scott, welcome. To get us started, please do tell us a little bit about yourself and the work that you do.
Great, thanks Nitesh. It's great to be on the podcast. Thanks very much for inviting me. I work for Codelco. It's one of the world's largest copper producers. It's a Chilean state-owned company with mines, smelters and whatnot in Chile, but a global client base. We produce about 1.4 million tons of copper each year, and we sell both final product, that is copper cathode, and we sell concentrate for further processing to clients in the east, in the west, in the north, and in the south. My role is in the strategy and market intelligence team, where essentially I keep tabs of what's going on in the world of copper, and I turn that into useful information for the commercial team and the board. This can cover anything from supply and demand to new technologies to regulation, the impact of tariffs, and that sort of stuff. Prior to this, I worked for both management and industry consultancies, as well as BHP, another mining company, and in various finance houses before that.
Excellent. Well, turning to the presentation that I witnessed last month, you argued that prosperity in modern societies is fundamentally tied to our ability to extract and accumulate natural resources. Can you explain the idea for our listeners and who haven't thought about prosperity in this way before?
Yeah, sure. Look, in the presentation, I led with a quote from Karl Marx. And the quote, the abridged quote is, "The wealth of societies presents itself as an immense accumulation of commodities." So what this really means is that in order to grow, to be prosperous in the capitalist definition of the word, as recognized by a communist, is that society needs a stock of commodities, which means metals in use. Essentially, the more we have, the more we can accumulate, the wealthier we can become. Now, this makes sense. When you look around, you think of what we see in our society as necessary for wealth generation. Buildings, bridges, rail, telecommunications, and whatnot. All of these are the products of mining, natural resources used in another way. Therefore, the ability to grow, to generate wealth, is a function of the ability to accumulate these natural resources and then turn them into useful things. For countries that have them, it's about corralling them and using them. And for countries that don't have them, it's about acquiring them, whether through trade, conquest, or other means.
Excellent. So when we think about economic growth, we often picture technology or finance. You take a more physical view. That physical stock of metals and materials is what really determines economic power. Why is that?
Yeah, look, to me, if you look around, you think about what is it that makes a society prosperous or makes a society wealthy. My view is its infrastructure. Hospitals, roads, bridges, telecommunications, and whatnot. These are all things that allow trade to occur, specialization to happen, and alternative industries beyond agriculture to develop. Particularly if you look at something like roads and bridges. In a society where you have none of these, it's progressively harder for a farmer, for example, to transport surplus crops to a market, and then to sell them for a profit, and then to reinvest those to more crops. So likely he or she doesn't, and they remain focused on subsistence agriculture. But if there are roads, bridges, crops can be transported to markets before they're spoiled, which allows a farmer to accumulate more profit. But equally, this means you create a class of people who are not farmers. They can buy food from the market, which then allows them to do something else, be they entrepreneurs, thinkers, whatever else. But to me, this whole scenario only plays out with infrastructure. It only happens when metals are transformed into other things. And I think this idea of growth being driven by technology or finance really is a modern view of a prosperous society. It's really something we've only seen in the last 30 or 40 years. If you go back to, say, sort of 200 years or even further back, early development was really around infrastructure. It's about factories, about bridges, about rail. Bernstein, a bank, picked up on this, and they've got a great chart where they showed the global stock of use in steel and the growth, and they plot that against GDP. The correlation basically is 1, and that means that as your stock of steel goes up, your GDP goes up. This makes sense when you consider steel's used in everything, from trains to bridges to buildings. So the simple way that I think about this is that a country that can accumulate more of these things, more natural resources, is a country that will prosper. That means to grow, to lift people out of poverty, we need more of these commodities. And then given the uneven distribution of metals in use, that means we need multiples of what we've already produced to lift even more people out of poverty, thinking about how many currently live in poverty.
So you said the world will need far more steel and copper, even multiples of everything we've already produced, just to lift people out of poverty. Why does human development require such huge expansion of material use?
No, look, that's a good question. And I think there's several reasons. Infrastructure is typically very resource intensive. Bridges, roads, building, power transmission and distribution, all these things which we would regard as a modern building blocks of society, they all require huge amounts of metal. Even if you just look at solar power, for example, it takes 10 tons of copper on an offshore wind farm. 10 tons of copper is a huge amount. And that's just one wind turbine. Equally, if you look at something like health, if you want to sort of really put this in context of poverty, better health is associated with better working lives and longevity. So hospitals are key. But equally, getting people to hospital to get the care that they need also means you need roads and bridges and whatnot. But equally, you need universities to educate people. In order to connect people in these ideas, you need yet more infrastructure. So this idea of this infrastructure deficit becomes clear when you contrast countries in different stages of development. If we just look really at Europe, China, and the US, these 3 countries and regions are really characterized by infrastructure, roads, airports, and whatnot. They also have populations that are relatively healthy, lead long lives, are not focused on manual labor. Then you contrast this with large parts of Africa where they don't have reliable power. Now, how can you start a business without power? Even if you could, how could you move the product to the market? Even if you got to the market, if you haven't got power, you can't sell it to someone else. Equally, if you haven't got a bank, you can't store your profits. So all of this is underpinned very simply in this one example by electricity, and that is in copper. And if you scale this by considering that 62% of the world's population lives on less than $10 a day, it's a World Bank estimate, huge investments are needed to lift people out of poverty. And 62% of the world's population is 3.4 billion people.
Wow. So when you look at current global production of critical metals, how far behind are we from what a fully developed world would require?
So, when you consider that the creation of wealth is synonymous with the creation of physical infrastructure to support human well-being, you really start to see the scale of the challenge. Steel is a great example here because there's always been so much work done around it. Global average of steel consumption is 4 tons per person. But of course, this masks a massive variation. A developed country, the US, Europe, or wherever, typically has about 15 tons of steel per person. But then developing countries are much lower, often only in the hundreds of kilograms. And this makes sense when you look at this infrastructure deficit. You look at the bridges, the roads that we have in the Western Hemisphere, and you go to a place like Africa where it's a dirt road. There isn't a bridge. You wait for a ferry kind of thing. And then you think about, well, what do we need to move developing to developed? Well, we need 3 to 4 times as much steel as we currently have. The stat that's often given out with regards to copper is that we need more copper in the next 20 years than has been mined in all of human history. I mean, that's immense. More copper in 20 years than has been mined in 5,000. We need more of everything to support this infrastructure. Steel, copper, nickel, coal, you name it. We need more parts of the periodic table that we recognize. But increasingly, this idea that we spoke of in terms of technology and finance, we need more obscure parts of the periodic table. Think about what goes into a modern mobile phone. Cobalt, tantalum, tin, tungsten, things I can't pronounce. We need more of all of these things. If in a simple example, we to give more people more phones to connect them to the markets and to their customers. You scale that globally across everything, and the task is massive.
Wow, that does look like a mammoth task to overcome. I guess one of the countries that are is most advanced in developing these materials is China, and China now consumes an extraordinary share of the world's raw materials, from metals to cement to energy. What does this tell us about China's stage of development and why rising powers tend to be so resource intensive?
Yeah, look, China consumes, a huge amount of commodities and has been, this has been instrumental in lifting hundreds of millions of people out of poverty in the last 30 years. And if you look, one of the charts I showed in the presentation was if you look at China's share of commodity consumption, it's immense. Half the world's global copper, coal, steel is from China. Nearly half the world's aluminium. But equally, not just metals, it's soft commodities, it's rice, it's cotton, it's basically everything. China is the biggest customer to everyone who produces anything. And we're constantly surprised at how large these numbers are. One country consumes this much. Wow, that's amazing. It's crazy. But this tells us that China is a rising power, which makes sense because they're trying to do two things. They're trying to overcome an infrastructure deficit and they're trying to lift people out of poverty. And these two things are massively commodities intensive. They're building the stuff that allows them to build other stuff that allows them to become wealthier. So if a country wants to grow, if it wants to develop, it needs this infrastructure. To build this infrastructure, it needs these commodities. And that for me then is the key definition of the rising power. It's the creation of the infrastructure needed for the accumulation of wealth. It's a bit of a mouthful, but essentially that's how I think of it.
Yeah, well, and so how unique is China's situation? And a lot of people think about China's appetite as being exceptional or even dangerous, but have we been here before?
Yeah, look, I mean, for those of us who work in the industry and, every time we go to a presentation, the chart gets flashed up and, the top 20 things that China is the leader of, it's always interesting. And I think the narrative has typically been around that this is, as you say, somehow dangerous and somehow unexpected. But, history teaches us that this level of commodity demand from a single country is not actually unusual. If you plot copper consumption for Europe, the US, and China on a graph over the last 200 years, and you plot this against the share of total copper production, really interesting trends emerge. The dominant global power typically consumes the largest share of copper, and this is anything from 40 to 60% of global consumption. The US consumed 60% at one point in time. Admittedly, that was during the war, but the point is they were consuming it because they were making stuff. The UK was typically 40 to 50%, and then the US, even as they've been kind of the dominant hegemon until the 20th century, they were still 40 to 50%. So what China consumes nowadays is not so different to what the UK and the US consumed when they were the dominant powers. Britain obviously had the Industrial Revolution. And that was them building the infrastructure to build wealth. This then gave way to the US after World War II. Both of them, at their points in time, were the factory of the world. They produced the majority of the stuff the rest of us bought. And this is underpinned by vast amounts of commodities consumed. And now, China has been referred to as the factory of the world for the last 2 decades. And so I think this really shows that they are performing the role now that the UK and the US performed in the past. And looking at this kind of idea of historical consumption, and what, tells us a couple of things. Britain and the US were both the dominant powers and the dominant consumers for decades. So, 30, 40, 50, 60 years. So what this suggests is that where China's at is not an anomaly. It's not, they'll get it going to come down again. They could be this level of consumption for this many commodities for the next 50 or even 100 years. And you can, consuming this much makes sense as a rising power because, as I said, the factory of the world. They're building the stuff, and that is their comparative advantage. It's usually cheap labor working in factories to produce stuff for the rest of us.
Wow. You draw a connection between access to strategic materials and the rise of dominant powers throughout history. Why have resources always been at the center of geopolitical influence?
No, look, this is a concept raised by Ray Dalio in his changing world order idea, and says that while empires may rise and fall, typically there's only one dominant power in the world at any one point in time. These dominant empires have similar characteristics. That is a dominant currency, or they are the largest trading nation. They have a global currency. They have control of supply chains and usually a preeminent military. The point of what makes a state dominant is largely dependent on its ability to control and harness strategic resources. So if you go back to the Dutch Golden Age and the Spanish Empire, ultimately it was colonies and trade that allowed the accumulation of wealth. Britain then became dominant through a new technology, that is the Industrial Revolution, and access to coal and iron as well as its colonies to build its factories. And the US, of course, has been similar as well, using the industrial base developed during World War II and with access to domestic minerals. So without access to or control over raw materials, that is commodities, none of these powers would have had the ability to be dominant. So putting it simply into today's term, access and control of commodities is what determines the level of power. And this is clearly evident in in China's use of rare earth export controls, and also in the US push towards direct ownership of commodities now.
Great. And so many thinkers argue we're in a transition between great powers. From your perspective, what are the signs that the global order is shifting again?
Yeah, again, this is reaching back to Dalia's work, which I think is really fantastic. He talks about the decline and ascendancy of powers, where he's going to change from one empire to another, and this transition period, effectively, he's labeled the New World Order. Essentially, it's a shaking out of the way things are done, and who's in charge really. We move from one hegemon to another. Now, the consistent characteristics of this New World Order, usually the reserve currency issuer has resorts to money printing after taking on high levels of debt that lead to currency depreciation. In turn, that leads to economic change, where significant wealth and value disparities grow internally. This leads to societal splits as people's well-being is affected. This, in turn, pushes on to internal conflict, leads to increased political polarization, and the attractiveness of populists as people seek answers to their troubles, placing hope in ever more extreme politicians. This may or may not be accompanied by external conflicts, so wars or whatever sort of pressure, but almost always there's this new technology which is coming through, which creates winners and creates losers, and often the hegemon misses the technological jump. Now, in the transition from Britain to the US, we can see a number of these. There was war debts that Britain had taken on, there was the fall of the Bretton Woods system, or the pressure on the Bretton Woods system, particularly through the Vietnam War, various other wars. So taking this framework, and if we apply it to what we see nowadays, I think there are a number of parallels that we can draw. I'm not making any statement saying that we are in this, but just it's interesting if you take this idea from Delia. So if you look, is the US dollar as dominant as it was, or is gold or yuan becoming more dominant as an alternative? Increasingly, I think it's hard to not argue that US politics are more and more partisan, even more so than in other countries. And I think certainly the US level of debt is a concern for investors everywhere. So it would look like the building blocks are kind of there to be in this transition period. And the conflict between China and the US is like almost a daily thing. And that's technological, diplomatic, it's trade. So looking at this, you could argue we definitely are in this new world order business.
Wow, that does highlight some potentially scary prospects. And history shows that when a rising power challenges an established one, tension and often conflict tend to follow. Um, how does the modern race for critical minerals fit into that broader geopolitical dynamic?
Yeah, no, look, I think, again, another historical sort of framework here. This was an idea from a guy called Graham Allison, and it's called Thucydides' trap. Now, Thucydides was an Athenian, from Athens. And his point was that when a rising power challenges a ruling power, it can lead to tensions and often to conflicts. Now, Thucydides' observations were specifically in relation to watching, to Sparta watching Athens become more and more powerful, 300 or 400 BC, whenever it was. But if you look at what's happened in the last 150 years, and look particularly in a Western Hemisphere or European perspective, you see that many points of this kind of transition. You look Britain and France several times over the last sort of 500 years. Russia and Japan ended up in conflict. Germany and other various European powers in conflict. The US and Japan, and so on. So thinking it through this, and then you look at what we see nowadays, we see something similar in my view. A quick glance at the news on any day will make it plain that we're in a phase of conflict, and this is between the US and China specifically. Now, it's not a hot conflict. That is, it's not an outright war. It's more what you term a cold conflict. So it's almost like Cold War version 2 kind of idea. But it's definitely conflicts in technology, in currencies, in trade, in minerals, in diplomacy. Literally, you can say that conflict in tariffs. So each of them are pushing the tariffs up here in the year. It was quite amusing. But the race for critical minerals really very clearly shows the tension here. And I think, to the point you've made, this shows it kind of key. And rare earths are the real example here. In order to see how important critical minerals are and how both China and the US regard them, you just simply have to look at America's response when China said they were introducing restrictions. Their response was extreme, saying this is unfair or whatnot. And I think that really highlights nowadays access to these critical minerals is really where power lies.
Wow. So you said that countries with key mineral deposits no longer want to just ship raw materials. They want to participate in the value chain. What does that shift look like in practice?
Look, there was a great article in Fast Markets by someone called Andrea Hotter, and she said that geopolitics matter as much as geology nowadays. And I think it's a very key phase. It's basically also an acceptance or realization that trade is not going to have the desired outcome in every case. So ultimately, what we're doing, we're talking about controllable resources, and it's not just access to resources on an open market. A clear example of this to me is if you look at what's happening, with the US trying to broker a peace deal between the DRC and Rwanda. Now, both the DRC and Rwanda are responsible for critical minerals, and it works for the US to generate goodwill of both sides to have preferential access to resources. Of course, they did something similar with Iraq and the oil over there. And then also you look at US investment in critical minerals companies in Australia. Again, it's about access. They're looking to buy access. From the Chinese side, you can look at this. It's the Belt and Road Initiative. It's often a cash for infrastructure or cash for minerals deal. And countries themselves no longer see it as enough to just let the market sort it out. They want to actively move and leverage their position. And I think Indonesia is a great example of this as well. They've been able to force companies to build downstream value add in their country. So around nickel and around copper. And so you see these countries are no longer willing to just, foreign companies come, you dig, and we sell. No, they want something else for it. And I think both sides are now trying to exercise their power, but I would argue that with critical minerals and with the movement towards a multipolar world, potentially we're in a situation where the owners of the resources are the ones who hold the whip hand, so to speak.
Excellent. So let's look at sort of the mining industry's challenges. So despite rising long-term demand for metals, investment in mining has been weak for years. What explains this mismatch and between the world's needs and the capital that's flowing in?
Yeah, look, for those of us who've been working in the industry, and this has been evident for quite some years, there are a number of markers that you can look at. One of them is you look at exploration drilling. Where has it been done and what commodities has it been done in? So the long-term trend has been down. And copper obviously still dominates a lot of that, but the trend has been down. Also, from a mining company perspective, you can look at the capex to depreciation ratio. And what this shows then is where miners typically been paying out dividends rather than investing in long-term assets. Now, I think this is happening for a number of different reasons. I think miners, particularly large miners, underpinned by iron ore, have been hugely cash generative. So investors have become more demanding of dividends. Certainly mining is risky and increasingly uncertain in the world, and it's hard for a company to justify tying up billions of dollars in a new greenfield mine. Easy stuff being mined out. Nowadays it's hard, it's low grade, and often a country where it's tricky to operate. And then from an investor standpoint, tech, of course, is the counterpoint here, but from an investor standpoint, there are many other places that they can make investments that can make more money. Just look at the rise of NVIDIA. Mining companies have been pretty much flat, but if you took the money invested in a mining company, put it into NVIDIA, you would have tripled your money in 2 years? So I think these sorts of things are really driving money away from mining. But then equally from a miner's perspective, it's becoming harder and harder to raise financing. ESG requirements and a lack of understanding on the part of the banks means as mining is often simply excluded from access to finance. So it's regarded as negative and whatnot. And so you just can't get finance, and finance you can get is expensive, which just makes these difficult, expensive, low-grade projects even harder to get over the hurdle. And then finally, I think in some senses from a population perspective, mining is quite an esoteric sort of thing. Usually it happens somewhere else. You don't actually see it. And people don't always relate a lack of funding to the miners as meaning their foliage, their cars, their electricity or whatever is going to go up in price. But the reality is that's precisely how it works. Limited investment leads to shortages, which leads to higher prices. And because mining is patient zero in the value chain, if that becomes more expensive, absolutely everything else becomes more expensive. And I'm not sure that link is usually appreciated, certainly not in the West, because we don't really mine in the West. So we don't ever see holes in the ground. We don't see the impact of it.
So if the world truly needs multiples of today's metal supply to meet economic and climate goals, what's the single biggest obstacle? Is it capital, permitting, technology, environmental constraints, or political resistance, or a combination of the lot?
Yeah, I'm going to cheat on this one. That's a combination. Look, I genuinely don't think there's a silver bullet. I don't think it's, you solve this one thing and then you solve all the problems. I think it's kind of an everything all at once kind of approach. And I fully recognize that makes it harder because you need all these different parts, not just of the value chain, but the different part of the ecosystem to come together to make it happen. But that's all true. But I still think that, if I had to pick one thing, it'd be permitting. It takes on average globally 15 years to develop a copper mine. So from discovery to production is on average 15 years, which is a hugely long time. And the majority of this time is tied up in permitting. Now, it's actually right that permits must be subject to rigorous processing. They meet all the right standards. I'm not doubting any of that, but it can be made smoother. Often there are multiple departments you've got to submit to. Ultimately, there's overlapping submissions. There's lack of dedicated government understanding or support. They often slow it down. In the US, the BLM has been basically stripped out. So the people who would be on the other side, the people you submit your permit to, aren't there to review it. That just leads to delays. But equally, capital is expensive. Access to money needs to be easier, needs to be cheaper. And the challenge, I think, is a lot of governments don't recognize just how much capital you need. In context, in the mining space, 500 million is really kind of the bottom end of where you'd want to get investment. If you want to build a copper mine, even a medium-sized copper mine these days, it's 2, 3, 4, 5 billion. So if the EU comes out and says, no, we've got €100 million fund to invest in 10 different projects, it's like, what, 10 million doesn't move the needle. So access to financing cheaply and lots of it is as critical as updating the permitting system.
Wow, that does sound like a challenge. You said that mining is no longer just an industrial activity. It's becoming a pillar of national security, technology leadership, geopolitical leverage. So what countries are adapting best to this new reality?
Look, I think it's a really good way of putting it. But I would argue that it's a new reality for the West, but not for China. There's this great quote from Deng Xiaoping. He said, the Middle East has oil, China has rare earths. So that is the recognition 40 or 50 years ago that minerals are key to strategic advantage. So China obviously stands out in this whole game. They understand how this works. They understand what actually the raw materials mean. And they've actively, worked on that the last 30 years. That's why we spoke earlier about the amount they consume. It's because they've got the factories. It's because they've got the processing facilities. They've actively worked at this. The US, I think, is now realized the importance of geology in mining. They now actively seek to close gaps. So you see this in, they're making direct investments in companies, the offtakes and funding, Department of Defense and whatnot. So they're starting to come along. I still think Europe is quite far behind. They need to focus more on how to make themselves a client of choice, and how do you build up that? Then equally, what we're seeing now is smaller nations such as Australia and Canada, they're leveraging their national endowment to get investment in their firms. So whether they are making, whether they're underpinning the fund or whether they're brokering a deal, there's a recognition now that something needs to change.
Okay. So if you could have every policymaker understand one idea from your work, what would it be?
Look, as I said earlier, I think mining is esoteric. Most, just to a lot of people, it's, young population is quite esoteric. It's risky, it's expensive, and it's increasingly strategic. And I think this is what policymakers need to understand. Every deposit is unique, and it may not work out as planned. Hence the slow approach of miners to de-risk investments. So policymakers can help all of this by supporting the industry both financially and offtakes. That de-risks the project, makes it move forward faster, and then that gives that country access to the minerals that they can then use in a strategic way somewhere else.
Wow. So one final question. So in your view, what is the single most important part of the global resource story that people still don't appreciate?
Again, I know I'm banging a drum on this one, but it's people underestimate the importance of mining. They underestimate the contribution it makes to our lives and what is needed if we want to lift people out of poverty. I think there's so much focus on tech and this sort of stuff, but the great quote to think about this is that, if you can't grow it, you mine it. And so you look at everything around us and say, well, unless that came from a plant, we'd had to mine it. And I think people need to understand that mining is fundamental to everything we do. Even as tech becomes more advanced, you think about it, you're building data centers and whatnot. What's in there? Copper, steel, concrete, and that comes from a mine somewhere. So people need to understand this. And, to be even blunter, the lights don't come on without mining. And that really is kind of the starting point. If you think about a modern society, it's electricity.
Wow, that is a great reframing of how we think of the world. Thank you so much, Scott, for sharing your valuable insights with us. Please do let our audience know how they can read more of the material that you write, and how do they follow you.
No, good. Thanks, Nitesh. It's been great being on the podcast. I've really enjoyed these questions. It's a good way to think about the industry. I've appreciated the challenge on the questions. Look, I'm on LinkedIn. It's only really social media one, so I'm on there. Hit me up, send me a question. I love talking mining. And I can talk mining all day. So anyone's got any questions, please send me a message.
Great. Well, thanks everyone for tuning in. We hope you've enjoyed today's episode of the Commodity Exchange. If you want to hear more from us at Wisdom Tree, please do subscribe on whichever platform you're using. You can follow me on X, formerly Twitter, with the handle @Nitesh Shah WT. And if you want to learn more about commodities, visit Wisdom Tree's website, where you can see a wide range of research material and insights. Until next time, to clarify, the views and opinions expressed in this podcast are those of Wisdom Tree and Scott Crooks, and are subject to change. Anything we present in this podcast is not intended to be relied upon as a forecast, research, nor as investment advice or tax advice. The information and opinions expressed in this podcast are not a recommendation, offer, or solicitation to buy or sell securities, and reliance upon them is at the sole discretion of the listener. Please remember, past performance is no indication of future results.